Gold is much clearer. And so it's waiting on whatever it is that those in power are thinking about, because it is a geopolitical asset. Clearly, gold is for war. We've had a load of trouble. It preempted that. It knew it was coming before we read about it. Yeah. So now it's waiting for something in the future, and that's probably something that would happen 6 months from when it moved. Yeah. So what it's telling you is sometime in the next 6 months, something's not likely to happen. Yeah. So it's gone calm, but it looks like it's waiting. It's like looking for a green light or a red light. It is the amber line.
You're watching CapitalCosm. My name is Danny. It is August 5th, 2025, and my guest today is Clem Chambers. Clem, thank you so much for coming back on the show, my friend.
Great to be on, Dan. Great to be on.
Yeah, let's dive right in. Let's skip the pleasantries, get into the nitty-gritty. What is on your radar screen right now, Clem? What do you think should be on the radar screen for investors out there as things begin to unfold? So many things to talk about, but I'll let you steer the ship here initially. Go ahead.
Well, the thing that I'm thinking about is right now we've gone beyond a certain episode, a chapter. Chapter's closed. And that chapter is Mr. Trump saying tariffs, the market collapsing, somebody somewhere putting a lever and pumping the market back up again. Well, the market's back up again. And you can see it clearly, actually, more clearly in the good old geriatric Dow. And the Dow is back to where it was before the plunge. So now whoever pulled the lever to get it back up there can kind of push it back to neutral again. So there's going to be a shift, in my book anyway, of behavior now. And we've got coming up a weak dollar moment because interest rates are coming down and therefore the dollar must come down. So that's going to be a big issue. So they're the two things. What happens now that the market's back to where it was before everybody panicked or righteously ran, depending on your point of view? And what's going to go on with falling interest rates in America? And what does that do to inflation? Obviously, not necessarily good things, because the Fed, who I have high respect for, I might be the only one, but I do, is really still a bit nervous about inflation. But anyway, everyone's going to have to learn to live with it. And are we going to get a return to the gently floating up long-term S&P amazing bull market that never ends, or is it going to be different? I personally think we're going to have, if you pulled that chart to say 3 or 4 years, you'll see what I think we're looking at a continuation of. And I must admit to being, you see, you're obviously not a long-term investor. You crashed your machine doing that. You see, look at that. Look at that chart. I mean, it's just glorious, right? So is it going to carry on that long-term upward angle now, or have we seen the top? And I mean, I think it's purely down. It's all coming out of the White House. The whole world is pivoting on the White House, and that's probably not a great thing. But nonetheless, that's the fact. You can't fight reality. You trade what you see. And so are we going to now have a nice even killed voyage, or are we going to have yet more grenades thrown into the global bunker? And I think it's the latter. So what I'm spending my time on is thinking, what could the White House say next? What could what could generate that oh my goodness effect that they love to create? What is it that's coming up next on the agenda? They've done the tariffs. They've put the wind up Europe. Oh, now we're picking a fight with, they've bombed Iran, picking a fight with India. But, what is the next market shaking idea that's going to suddenly appear on Twitter or Truth Social? Because if you can predict that and you can put yourself in a position to, trade that before it happens rather than after, then there's a lot of money to be made.
I know it's a big ask, but if you were to wager $1, if you had to make a guess, what would you guess the next thing would be?
Well, I mean, the big one is going toe to toe with China.
Hmm.
But I would hope that that isn't on the agenda. So I mean, the hopeful person in me would say, please, let's not have that one. But you know, that obviously has been a big theme for a long time, and that really would shake the markets. But I don't know. I'm already positioned for that, so
Well,
that doesn't occur.
yeah, President Trump announced tariffs on pharmaceutical products coming into the United States, and of course, a large percentage of those pharmaceutical products come from China. So it certainly does appear that these actions are designed to prepare the United States for a conflict to the point where the United States can manufacture its own goods in the event of wartime settings. If they were to get into a conflict or a war with China now, it'd be it'd be a mess no matter what, but more so right now because a lot of the dependencies between U.S. and China trade. So they
Now,
kind of have to fortify the fort before they can do it.
for sure. I mean, it's hard not to see that. It's hard not to think that. It's hard not to explain what's been going on is exactly that. It's extremely difficult not to go, oh, that's what that is. And
Yeah.
I think that that is a very valid explanation, and why gold is going through the roof and why China's buying it, because gold is for war. But you could say that, you know, if you want to avoid war, you've got to prepare for it. That's an old trope. But also, if you prepare for war, it's also a way that you end up in one.
Mm-hmm.
So that's a double-edged sword if ever there was one. And yes, you could say if America can't make steel, can't make ships, can't make medicines, can't make clever aeroplanes and clever stuff that goes bang, then it's asking for war because it's putting itself in a weak position. So that's the alternative way of looking at it. You know, once America has re-established its economic dominance like it was in the past, then the world would be safe, obviously. And that's an argument that I think a lot of people who are doing it would make. And I hope they're right. I mean, it's not that we have much of a say in the matter. And the way that I see it is, if you trade the market successfully, you will do two things. You will make the market more efficient, and it likes efficiency. It doesn't like nonsense. And war is the ultimate economic nonsense. And on top of that, you make the money necessary for you to head off to New Zealand or Chile if the balloon looks like it's going up. So, you know, it's really your duty to be successful in the markets, not only for you and your family, but also for the overall ecosystem. So I look at it like that. But I've got to say that the attempt by America to reverse its decline is potentially quite dangerous, but also it's very shambolic. I mean, it's really shambolic. And I said this on another podcast a couple of days ago. I mean, the lady who runs the department that measures jobs, and the job numbers came out, bang. And Trump goes, I'm angry now. The job numbers there, that's all wrong. Oh, it can't be like that. You're fired. But actually, they're exactly the numbers he needs to show Jay Powell to say, come on, get the interest rates down like I'm asking you. So when you have things that are so random, it's not necessarily the solution to whatever the problem is. And something that occurs to me, which a lot of your gold watchers will like, is that there's this trope, and I think it's a sacred cow, that America needs to be the global reserve currency. And I think that that's half the trouble, that America is the reserve currency and therefore has to run this ridiculous trade deficit to push the confetti out into the world and it to be the global currency. Because you have to have enough of it out there, otherwise it doesn't operate as the global reserve currency. And the only way you do that is you've got to spend it with everybody else. And then, of course, you get your deficits, don't you? The government goes, we can print it like confetti and we can spend it on rubbish. Oh, yay, we can buy votes, la, la, la. And of course, people couldn't go out and take that money and buy stuff from the rest of the world. But the trouble is, the rest of the world gets your money and then it comes back and it buys your assets, doesn't it? Before you know it, you don't own your farmland, you don't own your real estate, because they've come back and said, do you know that plastic rubbish that you've got in your garage? Well, here's a pile of the money that you spent on it, and we're going to buy your house. And that's the trouble with deficits. But you need to have a deficit if you are the reserve currency. And a strong dollar, you don't need to be the reserve currency if you're a strong dollar. If you've got a great economy, you don't need to be the reserve currency. Japan isn't the reserve currency, never had it. Europe, Germany doesn't have a reserve currency, doesn't even have its own currency anymore. China has twice as many dollars in terms of yuan. Its own currency is twice as big in money supply terms as the dollar. So actually, it should be the reserve currency, and it isn't, because China don't want it to be. Because if China made the yuan, renminbi, or whatever you call it, the global reserve currency, it would have to run an export deficit. Mm-hmm. It'd have to run a trade deficit, and it doesn't want to do that. It wants your money, because it'll go back and they'll buy your hard assets with it. So, this reserve currency thing, with the dollar being the reserve currency, and people go, oh, what happens if that goes away? I think it would be a good thing for America anyway, because it'd have to get its acting here and start to be the economic superpower it was before it hollowed itself out in the last 30 years.
Clem, if you rewind back to the 1990s, you'll recall America was effectively given the world on a silver platter. That was the beginning of the unipolar world with the disintegration of the Soviet Union. Everything was perfect. Fast forward 30 plus years later, we're in where we're in today. And it does appear that we're entering into back into a multipolar setting, except this time a lot more contentious. And you see the United States, you see the West coming down from their high horse at the very top, slowly but surely declining. You can argue it's happening slowly, but be that as it may. At the same time, you have the BRICS nations slowly climbing up. Are we going through a Thucydides trap right now, to where the existing legacy power is slowly coming down, and then you've got these emergent powers coming up, and at some point they're going to meet, and the legacy power is incentivized to act in some sort of way to stop that from happening, because it's their best shot from there on out. Do we risk a Thucydides trap? Are we heading into a multipolar world? Go ahead.
I'm going to be postmodern about this. I don't like your framing. Okay. Power and all this stuff. What about people? What about just people? Yeah. If you look at your average American, they're better off today than they ever was in the past. That's good. America has got richer, but the poor have got richer faster, so they're catching up. Yeah, but America's not going down; it's going up, and I know there's been a few setbacks in longevity and stuff like that. But we are in a cleverer world today than we were 30 years ago. And while everybody might look back to the Fonds and happy days in the 50s, we live in a much richer world then, and then we did a much richer world now. Than we did then. Even if you just look at healthcare, and what happened if you got sick back in those days. So looking back at rose-colored glasses and say we're now poorer, that's not right. We're richer, and the West has got richer for sure. But the really, really poor countries, they were incredibly poor. I mean, in the 1980s, I think the average Chinese income was $200 a year, and it's now $18,000 a year. Yeah. So those countries have got a lot richer and have caught up a lot. And the worry might be, if you want to worry about these things, is they're going faster and faster and faster while we are slowing down. So by the time they catch up with us, their speed will be so fast that they'll tear past us. And we will be relatively less well off than them. Doesn't mean we won't get richer. It just means they'll get richer. And to an extent, it's already happened. If you go to London, all the best real estate in London is not owned. None of it's owned by English people or British people. It's all owned by people from abroad, because they're the ones with the wealth. They have built up their wealth and they've developed that. And you can't say they haven't worked really hard at it. Yeah, I mean, people are taking the mickey about Microsoft, showing the work-life balance in Microsoft equates to 3.5 hours of work a day. And, they're not working 3.5 hours a day in China. So there's all those issues. But if you visualize this as countries and power and armies and numbers, and you don't focus on the fact it's all about the well-being of the individuals within those countries, then you can have a much more bleaker outlook, because it's all about the well-being of people in general, humanity in general, and your nearest and dearest in particular. It's not about winning and everybody having to fail, and it's not a zero-sum game or a negative-sum game. It should be a positive-sum game where everybody does well and everybody's friends. Why can't everybody be friends? And so much of this, win-lose thinking, I think is unfortunately what goes on, and you have to take that into account. But it's not necessary to think like that. And if you're surrounded by people that are thinking win-lose, well, you have to calculate with that in mind, because at the end of the day, we're playing the game of markets, and the winner is the gut one. You win by coming away with more than you went in with. And if you have money, that is the power to pivot, which, we all need in these circumstances, because these forces that you discuss are way beyond our power to influence. So you have to have the resources to, pivot one way or the other. And it's a good place to be, the markets, to build up those resources, because it's a pretty straight game.
Interesting. So what about the fact that there's the lowest percentage of, people under 30 or around under 30 still living with their parents and not being unmarried? Like, if you look at some of the generational divide, more particularly with the younger generations, you do see this divide in terms of house ownership and things like that.
I think these young people, their music's rubbish, and they're lazy and they stay at home with their parents and all that stuff, just like they said about me when I was young. I think the generational thing is that old people like us say the same old thing about the young people every 10 years. It's the same old. They say about this, young people can't afford houses. Well, I mean, it might be different in America, because at stage before 2000, real estate was incredibly cheap in America. It was absolutely unbelievable. You could buy mansions in Hollywood for small hundreds of thousands of dollars, and are now millions upon millions. So there was a big change in the cost of real estate. But that's just because of the leverage that came along. That's because people could borrow so much money, and that drove the prices up. But when I'm only talking from a European point of view, nobody had houses of their own when they were in their 20s. They couldn't get a mortgage. They didn't have the resources for that. Yes, they could lean on the bank of mum and dad like they do today. It's almost as if anything you could criticize the young people for is that they feel like they should have one. But my generation didn't. I'm the last of the baby boomers. I'm on the baby boomer cusp. I'm Generation X, honest governor. But people didn't leave university and go into their own houses in those days. Couldn't afford it. They had to work till they were in their early 30s before they had, unless they had a handout from parents, before they could afford to get the starter home. So I don't know where the idea that 25-year-olds could have their own real estate comes from. It's certainly not so. People say that to me in the UK, and I say I didn't know anybody that had their own home before I had mine, and I was 29, and I was running a business with 40 people in it.
Yeah. Well, I mean, regardless of whether or not they should or shouldn't have it, it's still a directional change, at least by way of America, right? If you look at an American history throughout the last 60, 70 years, the parents of the millennials, the parents of the Zoomers were able to afford houses, and their offsprings are having a much tougher time with that, given everything that's given the macro layout. But so, whether or not they should or shouldn't, doesn't it still represent a directional change?
Well, I don't know. I bump into loads of really young programmers that get paid like gods.
Right.
And I mean, so I don't see that. And I'm sure if you were, I don't know, an offshore fisherman, you wouldn't be able to afford your house. But if you're a programmer right now, you've got money coming out of your ears. So, tell me about Silicon Valley and tell me about all the young people there making out like bandits. So it depends where you look, right? And there's more than enough problems to go around. but I'm not sure that's one of them.
Yeah. There's definitely.
I'm sorry to be an optimist.
No. I'm just doing my job as an interviewer. I'm just asking questions. Looking to invest in silver or create something unique? Go to firstmint.com and use the promo code CAPC. First Mint offers premium 0.999 plus silver bars and coins, perfect for stacking or gifting. Plus, they specialize in custom minting for businesses and events. Great for celebrating milestones or promoting your brand. For quality silver and trusted service, visit firstmint.com and use promo code CAPC and make your mark today. Once again, that's firstmint.com. Promo code CAPC. And while you're there, check out this great deal ongoing now. Well, all right, let's take it back to you mentioned gold. We're currently consolidating. We've been consolidating since April, and you've mentioned it multiple times on the show that gold is for war. What are we to make of the current gold price? Have we run up too fast? Is it consolidating during the summer like it did last year? If you look at a chart of gold, and from a 1 year view, we did have the same consolidation start of April all the way up until beginning to mid August, and now we are in the beginning of August. So should we anticipate some seasonality in gold? Yes or no, and why?
Well, I'm more of a fan of trends than saying when the clock's going to hit midnight and timing these things. It's not consolidating, it's consolidated. It's in a channel, it's clear as the day. Yeah, and it's going sideways, as clear as the day. Now, it is obviously therefore waiting. Now, the thing to try to hang on to these things is that price is looking out 12 months. Yeah, look at that. You'll see something similar in Bitcoin. You'll see something similar, and lots of assets are doing that right now. And they're waiting. Now, what they're waiting on is anybody's guess. I mean, I'm sure there's people in the know that are actually waiting on something that they're waiting on. But, they are, if you look, you see that, and it broke out a little bit, but you can see there's that sort of zone of sideways, but gold is much clearer. And so it's waiting on whatever it is that those in power are thinking about, because it is a geopolitical asset. Clearly, gold is for war. We've had a load of trouble. It preempted that. It knew it was coming before we read about it. Yeah. So now it's waiting for something in the future. And that's probably something that would happen 6 months from when it moved. Yeah. So what it's telling you is sometime in the next 6 months, something's not likely to happen. Yeah. So it's gone calm. But it looks like it's waiting. It's like looking for a green light or a red light. It is the amber line. And,
it doesn't look like a topping pattern at all. I mean, you look at this. This is definitely a consolidation. If you look at gold during topping patterns before, it never consolidates for this long. So much to your point. Sorry, I didn't mean to interrupt. Go ahead and finish.
No, please feel free. I'm happy with that. Otherwise, I never stop talking. There's a very interesting mathematical reality with random things. Okay, if you've got a random trend, something going on, but you don't know the end of it, and you don't know where you are, but you know you're heading in a given direction, it's always 50-50 you've arrived. So it's like there's two values. You can look at it in a certain way. You're halfway there or you're the whole way there. So in a trend like this, you can look at it and you can say it's over or we're halfway. Now, if you've got any reason behind your thinking that isn't just looking at squiggly lines, you say, well, there's a plenty more trouble coming down the pike geopolitically. It's just waiting for it. So if you look at trends, you'll see time and time again, they will break in half. There'll be a half, and there'll be a quarter, and there'll be an eighth, and there'll be a 16th, right? And that is an example of a break in the middle of a move. And this is a break in the middle of a move. Or it's the whole way, but it doesn't look like a whole way to me. And what's going to happen that's going to make everybody sensible again? I mean, they should be. After all, they are tasked, all these leaders, to bring prosperity and happiness to their peoples. as opposed to chaos and destruction and awful things. But of course, that doesn't normally work out the way it goes. So, I think if you think we've had all the bad news out of the blue that we're going to have in the next 4 years, then this would be a top. And if you think the chances of that are low, it's just a gap in the middle. And I think it's the middle 4,000s. When I keep drawing squiggly lines, I see somewhere in the 4 to 4,500 as being the next stop. It was when I was doing it early on, before it broke out, I looked at it and it was where we are now. And then as it developed, it started to look as things develop, it started to look like we were going to have more. And yeah, it's pretty strong. That's a pretty strong pause. And there used to be a guy in the 50s who had called Davos, Nicholas Davos, who had a trading system that would put a volatility band across that. And effectively, if you broke out of the box either way, it was going to travel a long way. And I think that holds true here. The line that you've drawn there, it'd have to break out a bit more than that. But if it made a clean break, up a couple of $300, then you'd probably be on the way to 4,500 pretty quick.
4,500. All right. Well, let's dive into silver. Is silver telling us are we able to unpack any signals or clues from silver as to?
Well, I mean, silver's looks like it's moving. I would say that's probably catching up. And I'm a diversified portfolio guy, and I can't diversify my portfolio in the old sense. So, but I do have a diversified portfolio of precious metals. So I've got a few trunk loads of silver, of old doubloons are, and because gold runs, silver runs, and I would say silver's just playing catch up. I mean, it is amazing. And I keep having to check these numbers because they don't make any sense. And I do like things that don't make sense because that suggests there's an opportunity to invest in it making sense at some point in the future. But as far as I can make out, there's only 25,000 tons of silver made every year. Okay, that's quite a lot of tons, but not really. And there's 3,200 tons of gold. So that's what is it, 8 to 1? So three's into 25.
Right.
Yeah. So silver should be an eighth of the price of gold, which would be not the 100 to 1 ratio it's at now. You would imagine it would move away from 100 to 1 more towards 8 to 1. Let's just put it that way. And of course, that would be a pretty strong re-rating. So,
and it's an industrial metal too. It has utility on top of it.
It's not good for war because it's too light. But it is it's the retail gold in the sense that people who would want to buy gold because they're worried would end up quite often buying silver because it's close enough, bimetallic money in the old days. And 10 to 1, 20 to 1, 40 to 1 have all been ratios. It's actually 5 to 1 if you go back enough because 5 to 1 because silver was quite difficult to actually extract if you go back far enough in history. So 5 to 1, 10 to 1, 20, and now it's 100 to 1. And that is suggestive of a move. Well, it's not quite 100 to 1 now, but it's still suggestive of an ability for silver to run quite a long way without gold even moving that much. Same for platinum. Platinum's the one that makes my eyes bug out. And I think when I mentioned it to on a previous show, it was like $900 an ounce rather than the $1,400 it is now. And but there's plenty of room for platinum palladium to run like crazy. Yeah, you see. I think I was probably talking to you about it when it was down in that range.
Yep.
But it's absolutely, blown out. And there's only 3 places to get it. Some in America, not much. Some in South Africa, not much. Some in Russia, funnily enough. America still imports it from Russia. Not much. And look at that chart. Look at it, recent history.
Yep.
And if you do the same thing with if you go back a long way, you'll see it 1 to 1 with gold. And if you go back you'll see it 2 to 1 with gold. And if you look at palladium, you'll see it was something like $3,500 an ounce only a couple of years ago.
There it is. In October of 2011, you had the gold price here in orange, and then the candlesticks here denoting platinum. And at one point, they're 1 to 1.
Go back more. Go back further.
Oh,
It was actually,
platinum was actually had. Yeah.
yeah, it was 2 to 1 at one stage.
Mm-hmm.
Yeah, they only make 200 tons of it, not 3,200 tons. 200 tons. And I keep saying that because it's like, it mesmerizes me. That's like nothing. 200 tons. I mean, I said on one podcast, I pointed out that the average American family consumes 50 tons of stuff, food, boxes, bits and bobs. 50 tons a year on average, an American family. So that's like 4 families consumes 200 tons of things. And there's only 200 tons of platinum made every year. So to give you an idea of scale, of how little 200 tons is, it's basically nothing. So, and it's a lovely precious metal. Look at it. Look at that caveman go on that chart. It's a nice chart, that. But playing catch up to gold, it's got plenty of blue sky above it, hasn't it?
Certainly does. Well, Clem,
200
I've
tons,
been
not 3,200 tons, 200 tons.
yeah. That's nothing. I mean, you could probably fit it in. You could probably fit the world supply of platinum in like a 3,000 square foot building or something like that, I believe.
I think you probably get in the boot of a car.
Yeah.
Very heavy stuff, and it's very, very, very dense. 200 tons would be basically. I think the whole of the gold supply in existence is the size of an average American house, and that's a lot. I mean, that's 100. That's about 300,000 tons because of the weight is they're such heavy metals that you can get a lot in a small space. I mean,
Right.
a ton of water is only a meter cubed.
Good point. Well, Clem, before we wrap things up here, I've been asking this question to a couple of my previous guests, and I want to get your take here as well. If you were to guess or put your best guess forward on what the next black swan would be, now by definition a black swan is something that is unpredictable. It's not a gray swan, right? A gray swan is something that that's foreseeable, but it is calamitous. It is impactful. A black swan is something. I'm just explaining. I'm sure you know what a black swan is, but I'm just explaining to the audience. A black swan is something that is completely out of left field and impactful simultaneously. So if you were to, make your best guess on what the next black swan is, something that no one's talking about, but that would shake things up, what would it be?
First of all, I think I need to refine your definition. A black swan is called a black swan because there were no black swans in Europe or in the world, as far as everyone was concerned. And they went to Australia and they looked in a pond and there was a black swan. And they went, oh, look at that, it's a black swan. Oh, look, there's another one, and 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 another one. So it went from no black swans to black swan out of the blue, much to everyone's amazement, to a whole lake full of them. So it's not just that it's it's not just a Mars attack, it's a sequence of many Mars attacks. And of course, the answer is the black swan is in the White House.
What, can you expand on that?
Yeah, Trump is the black swan. He is the unpredictable, never been seen before, creator of surprise. He is the instigator. There's nothing else instigating here. I mean, Putin instigated Ukraine and all that. But all the things that are going on, what isn't revolving around that situation? So really, you almost have to be some kind of Trumpologist if you're going to be calling what the next big uproar is going to be. Because where else is it going to come from? I mean, nobody else has anybody seen anything like this? For good or better for worse, there's nothing like this. So what is the next big instigation? Is there going to be another instigation? Is it likely there isn't going to be one? I would say, okay, it's all the instigations happened, all the wild, unexpected moves that have occurred. There aren't going to be any more now. It's just going to be calmness and peace for the next 3 and a bit years. That is not very likely. So the game is pick your what's going to happen next, and that is pretty difficult. But the obvious one is China, of course, Taiwan and China, and as America reestablishes itself as a fault, as a militarily capable country of long-term war, on a grand scale, not just, fighting one little country, but fighting a global conflict, which is what it appears to be trying to do at least, then, that is the one that is kind of staring us in the face. And it's like, it's hard to look that in the eyes, isn't it? So I think that is one thing to bear in mind. How are things developing with America and Asia? Now, the good news is that America has picked a fight with India over taking Russian goods. Now, if you are going to instigate a conflict with China, you can't have India not on your side. So the fact that America is, picking a scuffle with India, that's a good thing, because that means there's no geopolitical maneuvering to get India on side for a gigantic conflict, which has got to be a big relief in the circumstances. So you've got this. So if you say it's not about a conflict that is being planned, it's about being able to not have one by being as strong as possible industrially. Okay, then you turn that around and go, what does America need for that? Well, it needs to have chips onshore. Well, they've said that. It needs to have raw materials at the bottom of the pyramid of value nailed down. Well, it's doing that. It invested in Mountain Pass. It's trying to onshore chips, etc., etc. It's trying to get shipbuilding going again. I don't know what happened to Trump saying he was going to put big tariffs on any oil tanker that was built in China parking in America. I have to look that one up. But that's an example of an attempt to bring back all the components necessary to be able to flex, to project power, is what the military people call it. So anything that's about America being able to project power by being, once again, at least nearly the workshop of the world, that's gonna do well. So rather than predicting a black swan, landing on your head, it's a good idea to predict what is going to be boosted in value because of an attempt by America to be ascendant again. Because America has, and the Republicans would say and have been saying, is descendant. So ascendancy requires a change in direction, or mainly upwards rather than downwards. And for that, anything that helps the ascent is going to, do well, isn't it? So look for things that will make America ascendant. And the obvious weaknesses are metals. Yeah, we've seen that: rare earth, aluminium, copper, chips. Because if you make them a few miles from China and China decides to knock out your chip building capacity, you've got a major problem. So you've got to have that onshore. Because after all, Taiwan is, inverted commas, China. So, what do you do if a foreign country makes all your chips and that foreign country is disabled? Well, it's tricky, that one, isn't it? So you've got to bring the chips on board. You've got to be dominant in AI. You've got to have massive amounts of energy to power all that. So what you've actually got to do is you've got to have a massive growth scenario. Well, that could be very good. That could also be very inflationary. So, my model is we're going to have this period of potentially huge economic growth. Absolutely gigantic, unprecedented. Because remember, it's all about AI. And AI is not just there to, write your emails for you. It is actually there to boost productivity. And as productivity is what industry is all about. So you've got AI boosting productivity. You've got this dash for growth for many reasons, defense being a large part of that, and a huge explosion in energy usage and provision, because you need that to be number one in AI. And if you're not number one in AI, you're toast. So everyone's going to be running for AI, and everyone's going to be running for energy, therefore. So you've got AI making industry more efficient. You've got energy being produced in vast quantities to boost AI. You've got America trying to become the workshop of the world again. So that's all pointing, upwards for economics. And those things that will enable that will do extremely well. I mean, you don't have to look at NVIDIA for long to see how that applies.
Yeah, great answer. Well, it's been a pleasure having you on, Clem. Anything else you want to talk about that we didn't get into before we wrap things up here?
Well, I like to say that, with all my ramblings and crazy ideas, if people want to follow them as I produce them, which is quite a lot these days, right for Forbes, for Seeking Alpha and various other places, if they follow me on X, Twitter, or whatever it's called this week, they'll get a heads up for shows like this and for stuff that I'm writing for Forbes. And at the moment, I mainly write about precious metals, blockchain, geopolitics, and economics, and occasionally, this stock's a good one. And if they want to be, tipped off about that, they'll see that on X. It will I'll be liable to go on there and say, I've just done this article, so that will keep them au fait.
Okay. We will have the links to your socials down below, so check them out, guys. And if you guys got value out of this podcast, drop us a like and comment. Go, Clem, go in the comment section. If you disagreed with anything, that's fine too. But let me know what you disagreed on. Drop me your thoughts down below. I do, in fact, read all the comments. So let me know what you thought. Subscribe to the channel so you don't miss another episode. And also liking, subscribing, commenting, doing all this, all the YouTube stuff certainly does go a long way in helping boost this video in the algorithm, helping boost this channel in the algorithm, helping get this message out to as many people as possible. So a little bit certainly does go a long way. And then finally, check us out on Substack at capitalcosm.substack.com to get early access, ad-free versions, and uncensored versions of all my videos. So with all that said, thank you guys for watching, and I will catch you later. Bye.
I would just say that, Danny, that palladium, that's the thing that I'm keenest on. So as an outro, palladium, go have a look at palladium and look into it. It's
what's really quick, what's a good ticker symbol? XPD, is that it?
Palladium is palladium.
Okay, never mind. I found it. Let's go look at palladium really quick. We thought we were ending the podcast, but got one more thing to look at here. So, share screen. Yeah, so if you guys stay till the end of the credits, you get a special scene here. So
go put like 5 years on that.
5 years? Okay. There you go. Boom.
Is that right? I don't think so.
Are we breaking out?
Well, yeah, they're all breaking out. But if you go back a bit further, I think you'll find that it was, what's that price you got there?
Up here?
Yeah.
It's in the way, actually. Yeah. Hold on. 3,000, just about?
Yeah. So that's like 3 times where it is now, and that's only a few years ago.
Wow. All right. Well,
I tell you, the palladium group metals, platinum group metals, they're in for a good run, because it's all about environmental remediation, and when they're burning all this energy to make all this AI, they're going to need to remediate the pollution, and that's palladium and platinum.
Gotcha. Yeah, well, I haven't looked at platinum. As you can tell, there's no lines on this chart here. So,
palladium.
All right. Well, thanks for that heads up. We'll cover. We might delve into a little bit more platinum group metals then next time you and I speak.
Look forward to it.
Hash it out further. All right, guys. Thanks for watching. I'll catch you later. Bye.